We'll just start. I told you to read the Carolyn Company thing, right? Not the whole thing.
Okay. Yeah, I read it already. Carillion Company.
Okay, not the whole thing. The whole thing you won't understand until I take the class, right? Okay.
Okay.
So our third chapter is corporate governance. Okay. So in order to understand corporate governance, we need to know how it or how it actually came to being, or what led to some strict rules and regulations that is being imposed over the companies, right?
Yeah.
Okay. So Carolyn Company was a construction company. Okay. It was very, a very big company at that time. All right. But in 2018, what happened was it went into liquidation, right? It was going for cessation, all right, in 2018. Okay. And this
Yes.
particular company, sorry, I'm not sharing the screen, right? Okay. And this particular company at that time was a major contractor of the UK government. That means every building and every structures that the UK used to build for the UK used to provide for the public was actually built by this Carolyn company. Understood? Okay.
Yes.
Now, it was also the second largest company, construction company in the UK. Okay. And it had more than 43,000 people employed in it. Right. Okay.
Yes.
Now, as the time went by, this particular company started taking huge projects. That means they had number of projects to attend to. Okay. And they often failed miserably in pricing them and managing them. Clear?
Yep.
Okay. And this led to a huge cost and eventually led to a loss. All right. So in December 2017, this particular company was not allowed to take loan from the bank. That means the bank actually refused them loans. Okay. So their funds cut short. See, how do we know whether a company is not doing well when there is a shortage of fund, right? Cash flow issues. All right.
Yes.
And often cash flow issue is linked with going concern. Clear?
Yep.
Okay. And going concern is actually a concept you might have learned in FR or FA. All right. So going concern is a concept where when we start a business, we don't, intend to end it soon. All right.
Yep.
Suppose you start a business, you don't intend it to end in a year, would you? No, right? You want
Yeah.
it to continue forever, right? So that
Yes.
particular concept of starting a business is called going concern. Okay. So when there is a cash flow problem, okay, or when there is a difficulty in obtaining funds, this particular going concern issue would rise. Understood? That means you would have
Yes.
problem with your company being a going concern. Understood?
Yep.
Okay, no? So the same way in December 2017, the company was refused loans, right? So if the company is refused loan means they have cash flow problems, they have fund problems. Understood? Okay.
Yes.
Now, when this particular company collapsed, it actually affected the shareholders. It affected the economic, the economy as a whole because people lost job. Clear? And the
Yep.
government contracts was not completed in progress. Understood? Okay.
Yep.
And all the suppliers from whom the raw materials and the other stuffs were taken were not paid off. Clear? So it happened to create a ripple effect over the parties involved in the company. Clear? Now,
Yes.
when this issue was looked into, okay, it was found that this particular Carolyn company had directors, right? Directors are basically people who manage the company, okay? So these
Yes.
directors in 2016 still managed to get their payout, okay? Clear? So their remuneration of 2 million was paid out even in this dire situation. Understood? So
Yep.
the directors were not looking forward to make the company stand up, but rather than they were interested in their remuneration, right? So that is
Yes.
why in 2016, more than 2 million remuneration went out as a chief executive director's earnings. Understood?
Yep.
Okay. Now, this particular issue was brought forward, okay, and the Institute of Directors has particularly cited out that this company had its downfall, okay, because it didn't have an effective management, or it didn't have an effective governance. Understood? Okay.
Yes.
Now, this particular thing where the directors collected their payout even after the company was facing so much, okay, has led to the fact that the directors were unwavered of whatever happened to the company, right? They were only interested in taking out their payout, right?
Yep.
Okay. Now, if the company had been, if the directors have been more careful, okay, or if they had been able to manage the company, or if they were interested in the company more than they were interested in their paychecks, okay, maybe the company would have had a better future, right?
Yes.
Okay. Now, this was already taken, this money was already taken, right? Okay. And all the company could do was ask them back, okay, or ask the directors of their misconduct, okay, or ask them to keep back the money, right? Okay.
Yes.
But this was also not realistically possible, because once it's taken, okay, and once the company has collapsed, it's collapsed. Clear?
Yep.
Okay. Now, this particular issue, or this particular thing was also a scandal back then, okay? And it led to a major issue, right? Major issue, or a major, alarm, whether or not the directors would manage a company properly or not, right? So, if this happens to a company, it can happen to many companies. Clear? So, this has
Yes.
to be stopped, okay? So, the ACCA brought forward, or the world organizations brought forward certain rules and regulations which all the companies should, follow in order to avoid these things. Okay. So apart from Enron, there
Yes.
was also one company which did exactly what the Enron tried doing, that is manipulation. All right. And that company
Yep.
was WorldCom. Okay. And WorldCom did many, they took the loopholes from the accounting system, okay, and tried inflating their profits. That means they actually made or they actually showed the public that they earn more than what they actually earn. Understood? Okay.
Yep.
Hello. Okay. Now, this led to the fact that all the companies' capital expenditure was improperly recorded. Okay, and it was very, inflated. Clear? Okay.
Yes.
And this was not something that the auditors missed, because it was easily detectable. All right, and this created a scandal. Okay. So,
Yes.
taking into consideration all these things, the public organization, or the chartered organizations, and the other, registered public bodies uh, made it sure that this wouldn't happen again in the industry, right? This wouldn't happen again in the economy. All right. So they
Yep.
formed something called corporate governance. Clear? So corporate governance was formed so that such negligent act wouldn't occur again. Understood? Okay. So corporate
Yes.
governance is actually telling you how a company should be run, okay, how it should be controlled. Clear? So this is what corporate governance is. Okay. So corporate governance is the means by which a company is operated and controlled. All right. And what is the aim of the corporate governance? It is to try and prevent the company directors from abusing their power, which may adversely affect these shareholder groups. Okay. So shareholders are the essence of the company, right? They are the ones who contributed towards the capital. And the directors are the ones who manage the company, as we have discussed in chapter 1. Understood? Okay. And these
Yes.
directors should be in control, right? They should be in place where they have to be. They shouldn't do anything that would affect the company adversely, right? So in order to protect these things, or in order to make directors do what they are supposed to do, corporate governance was formed. Understood? Okay. So think of corporate governance
Yes.
as a set of rules and regulations. For example, when you're in school, you're supposed to, abide by the school's rules and regulations, right? You have to move according to what the school's norms are. Okay. So same way in the company, you have to move on
Yes.
according to what the company has stated in the corporate governance. Clear? So corporate governance is a guideline to which the company
Yes.
should be operated and controlled. Okay. Now, what are the merits of corporate governance? It gives transparency, all right? Because everything is, laid out, everything is, divided between the directors. No director is given extra power, okay? So anything that happens in the company is laid down to the public, all right? So it creates transparency, all right? Now, it also has greater
Yes.
accountability. Okay. So, whatever results the company would produce, it should be accountable by the ones who manages it. Clear? Simple. All right. Now, the corporate
Yes.
governance aim is to tell or, guide the others or guide the directors in order to run the company, right? So, this created efficiency of operations. Clear? Okay. Now,
Yes.
when we run a company, there might be risk, right? So in corporate governance, there are also guidelines that would tell you how these risks should be handled. Understood? So these risks are also better taken care of. Clear? Okay.
Yep.
Now, if you have corporate governance in place, then it is unlikely that the directors would abuse power, okay, or the company gets mismanaged, right? Clear?
Yep.
Okay. Now, especially when it concerns to public company, okay, this particular corporate governance is really, really signified upon, all right, or it is really stressed upon, but because see, all the public companies has large number of shares with them, okay, which is traded in the stock market, right?
Yes.
Okay, and this particular shares vest in the hands of the public. Okay, so when the company collapses, what happens to the economy? The economy collapses along with it. Clear?
Yep.
Okay, so in order to prevent all these problems, corporate governance is there. Understood?
Yes.
Clear now? Now, what are the
Yes.
responsibilities of see, this chapter is really important, mainly because you could have a dedicated question from this chapter alone, all right? And it can
Yep.
be for 6 to 12 marks. It can be for 6 marks, it can be for 12 marks, depending upon the examiner's mood, all right? Or the
Okay.
questionnaire mood, all right? So the question might be in the format like there would be scenario given to you, okay, and there would be deficiencies in the corporate governance that is given in the scenario, all right? That means the corporate governance is not good, okay? So you have to identify where that company went wrong in corporate governance, okay, and then you have to cite out recommendation for it. Okay, clear? So it can be a deficiency, it can be a recommendation. Understood?
Yep.
Okay, so the columns would be preset in the question. You just have to fill in. All right, you just have to take from the scenario and copy paste. Understood?
Yep.
Not copy paste exactly. The situation can be copy pasted, and then you have to explain what went wrong. Okay, and in the recommendation column, you have to explain what is actually needed. So that means you would have two columns. Okay, and this is they provide you with this column, and first column would be deficiency, okay, and the second column would be recommendation. Okay, this would be preset in the examination. You would have this, all right, and you just need to
Yes.
fill in one, two, etc. Okay, so how many, if they ask you for 6 marks, you're going to write three cases, okay, three deficiencies. Clear? And the
Yes.
mark would be split as correctly laid out deficiency would get 1 mark, okay, correctly laid out recommendation would get 1 mark. Clear? So two marks each. Okay,
Okay.
so when you identify one deficiency and you describe it properly, you get 1 mark. Okay, and when you provide a recommendation that is very valid, okay, that is plausible or that is reasonable, you get 1 mark for it as well. Clear?
Yes.
Clear now? When we do the
Yep.
problems, it would be more clearer. Okay. Okay. Now the responsibility of the auditors for reporting on corporate governance. Okay. Now, in the annual report, that is, see, the why is the auditor there? In order to look into the FS of the company, right? So if the FS is right, what would the auditor do? The auditor would prepare, no, basically if the FS, regardless of whether the FS is right or wrong, the auditor would have to prepare an annual report, right? Okay.
Yes.
So in this annual report, there is a dedicated paragraph regarding the corporate governance. Clear? Okay. And
Yes.
if there is any inconsistency that the company that the auditor has noticed, the auditor is going to highlight that. Clear? And
Yes.
such highlighted inconsistencies are below. First one, an error in financial statements. So if the auditor has found some error in the financial statement, okay, the auditor would have to raise a report regarding that, right? Okay.
Yep.
And this report would be raised if the director is not willing to correct whatever is being cited by the auditor. Understood? Okay.
Yep.
So always and always, the first step of the auditor would not be, directly saying that the company has misstatements in the FS. No, they're going to discuss with the director. They're going to tell them to rectify them. Understood?
Yep.
And even after saying that, if the directors are not ready to correct it, then the auditor would provide a report called as qualified report. Understood?
Yep.
Okay. You just need to study it like that now. There is an entire chapter dedicated to reporting. Okay. At that time, you will know it better. Okay. For the time
Okay.
being, you just need to know this. Clear?
Yes.
Okay, you don't need to cloud your brain with all the other chapters. So I'm going to go for one chapter at a time. Okay, so in this chapter, you even though you have this thing, don't study it properly. We'll be studying that in detail in the last chapter. All right.
Okay.
Now, second one, an error in the corporate governance statement. The auditor will add an emphasis of matter paragraph to their report. So, see, when there is anything that the auditor has noticed which would create a rift in the corporate governance in the organization, okay, then the auditor is going to provide a paragraph named as emphasis of matter paragraph where these things would be addressed. Understood?
Yep.
Clear now? Now, International Code of Corporate Governance, that is OECD principle. All right. So, OECD,
Yes.
as the name suggests, it is an international corporate governance code which has been issued for all the companies to follow. Understood? Okay. And
Yes.
this was published in 2004. Okay. And there are namely five code to be followed. First one is the rights of shareholders. Okay.
Yep.
Now, this code actually emphasizes upon the shareholders' rights, okay, of the company. Clear? So this would protect all the shareholders involved in the company and their rights towards their company. Clear?
Yep.
Okay. Now, this code also suggests that if the shareholders have, contributed towards the business, they also have the right to reap its returns, right? If you're buying
Yeah.
a share, then you have to get some returns, right? Okay.
Yes.
Okay. So this would ensure that investment returns are being issued to the shareholders for the risk capital that they have contributed. Clear?
Yes.
Now, second one, equitable treatment of shareholders. Okay. So this code suggests or give a suggestion or gives a law that all the shareholders in the company should be treated equally. Clear?
Yep.
Okay. You can hold a number of shares in a company. All right. Okay. And there can be people who hold more than you. That is there can be a majority of shareholders. There can be a minority of shareholders. There can be individuals. There can be foreign shareholders, right? So
Yep.
all these shareholders, regardless of how many shares they have, or regardless of where they are from, they should be treated equally. Clear?
Yes.
Okay, and no shareholder should be treated on a bias. Okay, and everyone should be treated equally. Okay, and anyone don't have any shareholder or any directors don't have the right to oppress any other shareholder. Understood?
Yep.
Next one is stakeholders. So I have already discussed there are two types of stakeholders, internal and external stakeholders, right? We studied in first chapter. Okay.
Yep.
Now, this particular corporate governance code gives a right to all the stakeholders. Clear? So whoever is connected with the company internally or externally has a right to be protected of their interest. Understood? Okay. So
Yes.
they can create wealth. Okay, and they can the company should employ people. Okay, and the company nowadays all the company should be sustainable. That means it shouldn't do harm to the environment. Understood? Okay,
Yes.
so here the stakeholders can be the bank. Okay, can be the employees, it can be the directors, it can be the environment. Understood?
Yep.
Fourth one, disclosure and transparency. Okay, so this code actually gives the company an accountability of whatever is being produced in the company. That means the FS. Clear? So the FS should be made in such a way that it is relevant. Okay, and there is timely disclosure of all the financial activities that is going on in the business. Also, it should have the ownership of the business. Clear? So these are to be given publicly. That means all have access to the company's things. Clear? Especially if it is a public company. Understood now?
Yes.
Okay. Next, fifth one is the board of directors. Okay. So the board of directors are actually wielding a power of running a company, right? Okay.
Yes.
So you have directors and you also have board of directors as well. Okay. So board of BOD is the one who is going to manage the company. Okay. So they are going to monitor the company. They are going to make sure all the objectives of the company is met. Clear? Okay. Now, so
Yes.
whatever happens to the board, okay, it would be directly accountable to the BOD because BOD is the people who are running the company. Clear?
Yep.
Okay. Now, BOD, we would be discussing in detail how the BOD works or how the other directors work. Clear?
Yep.
Okay. For the time being, read everything that has been taken just now. Just go through it and ask me if there is any doubt. You have the
Okay.
PDF, right?
Yes. Yes. I have. So we are going for.
The board and the OECD principles. Okay.
Yeah.
Okay. Now, as we have just looked into, board is
Yeah.
there.
If you need like a break, you can take like
No,
two,
no, no. I
five,
don't. I
10.
don't need. You need a break. I'm okay.
No, because you continue speaking, so that's why I'm telling.
No problem. No problem.
Oh.
Okay. So let's start. So the board and the OECD principles. All right. Okay.
Yep.
Now the board would have all the responsibilities towards the company, right? Okay. And especially when it comes to the OECD principles, the board should be sure that everything is kept in check. Clear?
Yes.
Okay. Now, there are a number of things that the board should look into. First one is evaluate and monitor the effectiveness of corporate governance policy. So every company would have a corporate governance policy, right? And
Yes.
BOD should be made responsible for evaluating it, to monitor it. Clear? That means everything should be in place every single day. That means there shouldn't be any negligence of corporate governance policies. Clear?
Yes.
Now, the board is responsible for appointing and monitoring of key executives. Okay. So there might be executive directors in the company. Okay. And the board is responsible for appointing them. Clear?
Yes.
Okay. We'll come in detail on what is executive director, what is a board, and how many people are there in the board. Clear?
Yes.
Okay. And the board is also responsible for aligning executive and board remuneration. Clear? And it should
Yes.
be made with the long term interest of the company. That means, like the Carolyn company, the directors shouldn't have an access to obtain their remuneration even if the company is not doing well. Clear? So it should always be kept in mind that whatever is being paid out to the directors are in align or are aligned with the long term interest of the company. Clear?
Yes.
Okay. Now there would be an agency problem because a company is run by someone else and owned by someone else, right? So this agency problem should be tackled by the BOD. Clear?
Yes.
Now, whatever is being prepared in the company should be monitored, and it would include the accounting and financial reporting system. Clear? So it should be made appropriately. Okay. There should be controls in place. Okay. And the board should be able to manage everything. Clear?
Yes.
Okay. Sixth one, it should ensure that all the disclosures are made available and communicated. Clear?
Yes.
Disclosures, as in when we study IAS and IFRS, there are things that need to be disclosed in the FS. There are things that needs the public to be known. Clear? So all these things
Yes.
should be disclosed and communicated. Understood? Now, OECD is something that is followed internationally, right? Now we have a UK corporate governance code. Clear? Okay. And
Yes.
UK corporate governance code is divided into 5 categories. First is the board leadership and company purpose. Second is division of responsibilities. Third one, composition, succession, and evaluation. Fourth, audit, risk, and internal control. And fifth one, remuneration. All right.
Yes.
Okay. Objective of corporate governance. So, what is the objective of corporate governance? First of all, it is a social responsibility. As I have said before, this particular downfall of any company would directly impact the economy, right? Okay.
Yes.
So, it is to provide prevent these things, okay, and prevent the economy as a whole, or in order to prevent any unemployment arising from these things, okay, that it has made a social responsibility. Clear?
Yes.
Now, corporate governance, these are the things that we have discussed before, just going through it. All right. And this also creates a transparent system, right? So everything is out in the open. Okay. Everyone can see what happens in the company, right? So it is transparent.
Yes.
Clear?
Yes.
Now, the corporate governance is making the management take the responsibility and accountability of what they are doing, right? So whatever happens with the company, the managers or the directors or the BOD is responsible for it and they are accountable for it. Clear?
Yes.
Now, corporate governance is in place so that it can protect the interest of the shareholders. Clear?
Yep.
Okay. And this and all would create efficiency in the organization. Okay. And
Yes.
when there is efficiency, when there is a tight managing system, when there is a proper managing system, it would also create achieving the social and economic goals of the company. Social goals, as in it would provide employment opportunities. Clear? Economic goals, as in it would flourish the
Yes.
company, it would create company's growth, right? Clear?
Yeah. Yep.
Okay. And this would also in turn create or improve social cohesion, as in working with the outside people or the society. Clear?
Yes.
Understood?
Yep.
Next one, it would also minimize if there is efficiency and minimizing wastages correctly is directly linked, right? If there is efficiency, it would minimize wastage, okay, and also most often there wouldn't be any corruption like the Carolyn company. Clear?
Yes.
Now, what are the importance of corporate governance? See, corporate governance would improve the corporate performance, okay? And it would also make the shareholders trust the company wholly, right? Trust whoever is managing the company, right? Now,
Yes.
it would have better access to global market, all right? A good governance would actually give them a name, right? Okay.
Yes.
And this would reduce the corruption. That is, it wouldn't be such case that happened in the Carolyn company. Clear? Now,
Yep.
if the company is run well, what happens? The company would get a finance from other institutions, right?
Yes.
Okay. And if the company is well, it would create market capitalization being increased. Clear?
Yes.
Okay. If the company is run well, there wouldn't be any risk that is there in the company would be addressed properly and probably would have reduced any scandals. Clear?
Yep.
Now, this corporate governance establishes accountability of the directors in managing the company, right? So whatever happens in the company is sole accountable accountability of the directors who manages the company. Clear?
Yes.
Okay. So it is again and again repeating whatever is being taken. Relevance is that corporate governance acts for the best interest of the company's business. Clear? And it would improve the performance of the business. Okay. It would make the company stable. All right. It would make the company productive, and it would also give the company to grow. Clear?
Yes.
Okay. This would also reduce the risk. Okay. And it would enable faster and safer growth for the company. Clear, no? Okay. And
Yes.
if a company is well run, then it would improve the reputation and as well as, attain trust of the potential investors and the existing investors. Understood?
Yes.
Okay. Now
Yes.
we'll stop here and continue tomorrow, Hasib.
Yeah, no problem. Yes.
Okay. Too much is not needed. All right.
Okay,
Small,
no problem.
small portions at a time. Okay. So that you have time to revise everything as well. Clear?
Yes.
Okay. So the recordings would be provided as soon as I get them. All right.
Okay, no problem. No.